What's going on, guys? How are you? How are you doing? Today I want to show you a very powerful and very accurate gold strategy that you can use and trade on anything. So I'm going to show you the times that you need to take advantage of, and I'm going to show you the setups that occur around that particular time, and I'm going to show you a lot of examples on how to trade this particular pair, which is gold. And if you're looking for a broker to trade gold with, which is reliable and fast execution guaranteed, you are looking at TIOmarkets, and the links are in the description down below. Make sure you get an account and get a hold of this strategy and start trading and make money. So what you are going to do is simple. If you're looking at gold at this particular chart, you can clearly see that we are on the M15 time frame right here. So on the M15 time frame, I want you to know that we are able to see the sessions clearly on this time frame, right? So we are looking at the Asian session just at the beginning of the day. Then at the around breakfast, we are looking at London session. Then around after lunch, we are looking at the New York Open. So if you are looking at my time here, the broker time is 2 o'clock, and 2 o'clock is my New York Open. So you can change that to your to your local time and to your broker time, right? And if you're using TIOmarkets like myself, you are looking at 2 o'clock as your as your broker time. That is the New York Open, but the New York Open in my local time is 3 o'clock, right? So we're looking at this window from 3 o'clock to around 16:30 actually in my local time. So if you're looking at this, you can clearly see that we have something of a setup in this particular one. Remember, this strategy, it does not need you to have bias, right? You are just looking at the market structure of the M15, and you're going to use that as your basis for entering and exiting trades, right? So if you're looking at this is gold, right? And on the M15, what do you see? You are going to see that at the beginning of the New York Open, which I have marked with this vertical red line here, this is the area where you are going to see the move, right? So if you're looking at a gold chart, you see that you have those aggressive moves that you see on the chart, and those ones happen in the in the New York Open. And if you are familiar with gold, you see that at this red line, which is the New York, you are going to see the retest of your of a point of interest. So we are going to be using 2 points of interest, right? If you are looking at this, you can see that we have a chart like this, right? We are going to be using this setup where you are seeing a break and retest. So the retest that you want to see here is going to be is going to be around 2 o'clock TIOmarkets time, or 3 o'clock my time, my local time, right? Or we're going to use this setup where you're going to be seeing price breaking a high, then coming and retesting an order block. So this order block is going to be retested from 2 to 3 at this particular time window. We're going to see a retest in this time window, and we are going to see a retest of this particular zone in this time window. Remember, so you have to know that the order block is not going to be formed in this window. The order block is going to be formed in the in the London session. So if you are looking at this, you can see that we had price going down in the London session, right? Then after that, what do we see? We see a break of this particular high. If this high was taken out here by this move, right? By this move, you can clearly see that we had an order block, right? At this particular zone. So you want to see very clear setups. Don't use setups that are not clear to your eyes. Trade what you see, and you have to know what you are looking for. And this is what I'm seeing here. We have a break of this structure. So we are looking for for a retest at this particular time zone. And where is your take profit? Your take profit is going at this particular high. You don't need to be greedy. You are going to be risking this order block, which means that you are going either to enter manually at this particular zone, market execution, or you're going to set buy limits there, and your stop losses are going to go below this order block, and you're going to go this way. So this is what you want to see, right? If you're looking for this again at this particular zone, you can clearly see again that what we have here is price taking out a low in the London session. When this low was taken out, what do you see then? You see that price then retraces back to to this particular area where we have these order blocks here and some fair value gaps there, and price would need to what, to retest that particular zone and go out and go down. If it doesn't get to what, to your order block or to your point of interest, it's fine. But what you want to see is to wait for a retest in this time window that I've given you. Then the next setup that you're looking for is this one, where you're seeing price breaking to the downside, right? Breaking these lows to the downside and coming back and retesting as time approaches to what, to this particular zone. So you're going to be using market structure here. We take out this low, right? Take out this low and we retest almost immediately. So what you're going to see is you are going to enter as price retest with this what, with this candle that you can see here, and you go down in the what, in the New York session, right? If you are looking at this particular one, you can clearly see that we had the first setup that I explained to you, where we are going to see a what, a break of structure at this particular zone in the what, in the London session. Then you see a retest of this particular order block. When this order block gets retested at 3 here, you are in the trade and your stop loss is above there, and you are looking at the what, the next possible low as your take profit. And this range that you are looking for here, let's just measure and see how many pips we are likely to get here. And you are looking at close to 100 points, and those points, if you are entering with the lot size, you know how much money that will be, right? And we are seeing in this particular zone, where we are seeing this is the time zone, and we don't have a setup to what, to go with this one. So what we would have done in this area is what, London session takes out this what, this high, then leaves an order block. Obviously this is the order block that we are looking for, right? This red candle in this what, in this area right here. So this is the orbit that we're looking for. So price comes and retested this particular zone, but it's way after what, the New York open. So you would have missed this trade, not because it's not good, but because the movements that we want would have happened already when this came here. And you can clearly see, you can see that after maybe 1 hour after the New York open, price will be what, will be consolidating. We want to catch the what, the explosive moves before they happen. So how do you catch those? You catch those by using what I'm telling you here. So this is another day, and the Asian session was just consolidating, and we have what, the London breakout here, taking out this what, this high, and price goes up. And what is happening is we have what, we have a fair value gap. Remember, we can use a fair value gap or we can use an order block. So in this case, we have a fair value gap because we don't have a very good order block to use. So remember, we use the best setup available, order block or fair value gap. So we have a fair value gap in this area. Price comes back, retest this particular area in the what, after the New York open. As you can see here, this is the New York open, the first red line. So this is the retest, and when price gets there, either you had limits at this particular zone or you enter at market price, your stop loss just goes below the what, the last candle of the what, of the fair value gap formation, which is this one. And you're looking for the next what, for the next high. And if you're looking for this high, this is how many points that you're looking for. You enter here and you are going for what, 80 points there, and that's very good money if you are trading responsibly there. Right, let's look at another example. You see that this is what, this is the New York open right there. This is the New York open. I want you to see that in the London session, we had what, we had an aggressive move. So whenever we have those aggressive moves, we are not going to get order blocks. We are going to get what you call fair value gaps. You see, this is a fair value gap that you see there. This gap needs to be filled and price can then retrace. So if you are looking at this, you can clearly see that if you are a follower of this channel, you can clearly see that we had what we call liquidity resting in this area, right? We had liquidity there, and price just took out that liquidity, retested the fair value gap in this area, and price expands lower. And if you happen to catch that move, right, this is the move that you are going to catch, and this is upwards of 150 points that you are going to get here. And if you are someone who trades gold, you know what that means, right? Let's look at the other example here. Let's just look at two more examples, and we can be sure that we understand what we're talking about. New York session, what happens? New York sessions opens there. We're waiting for what? We're waiting for a retest, right? What happens in the what? In the London session? London session was going down, breaks what? Breaks some lows there, breaks some lows, and left us with what? With some order block. So this is an order block that we are looking for. This is an order block that we have there. And if you were to get this trade right, you had to include this candle, because after this order block, right, we had this candlestick that came after it, with the pin, right? So this pin, we had to include it in the what, stop loss, right? You include it, but if you had entered there, we would have been taken out, because these pins right there just went up and took us out, and price continued downwards, right? So if you set your limits and your stop losses, you would have been taken out. But if you had entered at market, you might you have caught this particular move. Remember, this is not 100% strategy. It will work sometimes and it will fail sometimes, so you have to be very vigilant, and you have to use proper risk management, so that you understand what we are doing, right? We have this one, price breaks the Asian high here in the London session, then price comes back, retests this particular zone and goes up. So this is the move that you want to get, and you don't need to be greedy. You are just waiting for what you can get, and you go with what you can get, right? So the last example that I want to show you is here. What are we seeing here? Here we are seeing a what, this was a news event. So we want to avoid news events when you are using this strategy, right? We want just to use market structure. You don't be brave, right? We want to avoid those ones. So let me just remove these lines so that you can see this last example clearly before we call it a video, right? We have a break of structure at this particular zone. Then we have price making its way to the what, to the order block at the top there, and this is what we want to see. And if you look at the time of the retest, you will see that it's around the New York Open, our time that we're talking about. Remember, this is the New York Open, and price retest our order block. It means that we are ignoring all these. We are interested in the retests that happen after the New York Open or during the New York Open, right? Your stop loss is going to go above. Your entries are in the order block, and you are going to go for minimum how many points there? 180 points. So this is how you are going. So if you are looking closely, you can see that you are going to be staying in this trade for around 30 to 45 minutes. So you don't have to be on your charts all the time. So guys, this is what I wanted to show you, and I hope you will enjoy using this strategy as you trade gold on TIOmarkets. Cheers.